Beef Market Update with Ann Wasco on RealAgriculture.com is brought to you by Haney Farms. It's now time for the Beef Market Update with Ann Wasco from the Gateway Livestock Exchange. Annie, how are you doing on this Monday?
I am good, Sean. Where are you located today?
I am where every cattle person should be. I am at Agribition in Regina.
Good for you, and it's not even really winter.
It's not. I actually watched the Santa Claus parade from my window last night or yesterday afternoon, and there's no snow on the ground. It kind of felt like Christmas Santa Claus parade in Florida or something.
There you go, California.
It is like California. It's like being at Disneyland. That's what everybody thinks when they go to Regina. Okay, so Friday, Cattle on Feed report came out in the U.S. How would you describe those results?
Well, the numbers actually, Sean, were pretty much on target for what traders and the market was expecting ahead of time. So I'll define it as neutral in my view. So just to run through the numbers quickly for you, on feed as of November 1 in the U.S., down 1% from a year ago, and that's what the market was expecting. Placements for the month of October were down 5%. The guess had been down 4%, so we bit of better news, smaller placements than we were expecting, and marketings were right on target at +5%. So the market had gone into this report on Friday with those kinds of numbers expected, and as a result, this morning's openings pretty quiet, as you would expect with a neutral report.
Sort of gives you an indication what the year's been like when we get excited about neutral reports.
We've had so many bearish reports that you were expecting bad news. But, the market itself last week was certainly stronger in both the U.S. and Canada. We had a $4 to $5 jump in the U.S., kind of a lot of their live trade between 108 and 109. And up here in Western Canada, I'd call the Alberta market $3 to $4 higher. In live terms, 142, and our dress trade 235 to 240. So certainly stronger vibes all the way around. And I think you can define both U.S. and Canadian feedlots probably as current as we've seen in quite some time. So using that leverage to their advantage in terms of bargaining power.
Well, we got to talk about what's going on here forward with the rest of the year with the placements. But, I was talking yesterday to a guy that has a mixed farm. He has some pairs to keep him occupied in the wintertime. And he was saying, the calf market's been higher. I think we're going to hold on for a little bit and see how much higher it goes. What are we seeing at the auction market level right now?
Well, certainly, with the futures market moving up after making, their low back in October, and with here on a Canadian perspective, the Canadian dollar on the weaker side, all the indications when you run your math through for, summer of 2017, all look significantly higher than what we would have been, say, a month ago. So the calf market is responding to that. And I would define, just based on the average last week on a 5.5 weight calf here in Alberta, about $17 a hundred higher than the low it made 4 weeks ago. So pretty clearly markets are taking this better news, and cattle feeders, buyers, investors, whomever, certainly taking that along and spending more money at the market. That's close to $100 a head higher than where we were, say, a month ago.
So is that due to our feed yards optimistic about where the fat price could go? What's driving that?
Well, it goes hand in hand with what the futures have done. So the futures market for next summer have jumped $12 US, right? And so when you move it that much, and we've got the benefit of a soft Canadian dollar right now, though the math tells the cattle feeder that's buying, okay, we in turn are now expecting better markets ahead. And part of that has to do with these smaller placements we've been seeing, feedlots getting more current. We're still looking at more beef next year. It doesn't change the whole production scheme, but the market had to find its low, which now looks like in hindsight it was last month as far as futures and cash cattle. And today we're going to start to look forward to where this level might be as we head into the summer of 2017. So cattle feeders are just responding to what the futures markets are trying to tell them.
Well, and probably, if you're following the news at all, there's sure a lot of talk about the U.S. dollar and where that index is going. And so a lot of feed yards are probably also looking and saying, I think this Canadian dollar could be going lower.
Right. So, the strength there, just by osmosis or the opposite fact that we're going to see some weakness on the Canadian dollar. Lots of unknowns still in front of us on both of those fronts. But at this point in time today, if you're out in the market, that's the news you're looking at.
Well, it is the week of U.S. Thanksgiving, which is the best holiday that as Canadians we don't really get a chance to celebrate. But a lot of push for people to be eating beef during Thanksgiving, what I've been seeing on Twitter from a lot of the U.S. beef associations. But Annie, thanks a lot for joining us, and we will talk to you again very soon.
Okay, have fun in Regina.
How do you not?
Okay.
Talk to you later. Bye.
Okay, good now. Bye.